We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Welcome to our blue screen TV. Now blue screen TV, which is going to be different from the red screen TV, is going to be about action. It's going to be about a particular security or stock or something, and about what's going on. Whereas the red TV is going to be more educational, more theory and explaining things. But when you see the blue TV, we're examining something on the action and see what's going on. Something interesting is going on in the charts. And today we're going to look at DXY and a monthly chart. And what we're going to do is we're going to examine the trending channels. Everything bounces between a range. We have a range of resistance where people begin to sell and are a bit reluctant to go further. We have a range of support where people are willing to come in. So this is a DXY chart going back to 1998. I've had a bit of a play and I found these channels to be very interesting. Now our channels, I'll just draw the first one that I found pretty interesting from the most exterior point, I think about there and about there. Right, that's exactly perfectly. Here we have a channel, a downwards channel going into 2009 from 2002, and as you can see, price is bound by that channel. But what we have to look at is the channel width. And we take that channel width and we, put it on the top once and put it on the top twice. So when something is going down, it's channeling, and you can actually get a correction which takes you into the next channel, and if the trend is strong enough, it'll continue on down that channel. So you have a trend momentum in channel 1, bit of a correction, and then the trend would continue down in channel 2. And as it further goes along to channel 3, the weaker it gets, because the momentum, and in the Wyckoff term, the thrust down is getting weaker. Powerful thrust down, we had a thrust down here, but it couldn't break any lows, so it got weaker. And we had sideways action here, and it was very weak. And obviously when it broke this out of channel, we see here, this little area here, how price and the outer channel line resistance came, and then we broke it and we took off. But what I want to make point of, see how price held this upper channel line on the way down, and price was held by this first outer wave channel down, and then the third outer wave channel price was held there. So that channel structure has some merit on the chart. Okay, so I'm just going to take an image of that for the blog. So when you see a video, I'll put some images on the blog so you can look at them in your own time. Yeah, click that. Now the next channel, obviously price action was going sideways. I think it's this one here, so let's have a look. Get that right. I'm using the quick drawing tools of readtheticker.com, which you can draw on a chart like this and do your research to find out what's working. 2 high points there. Right. So here we had a sideways channel that was born after it broke. Once this channel here becomes defunct, it's still in play there, but something else is born when it gets into the third stage. So here we have a channel down, as you can see here, demand came in, the thrust couldn't get down to, here's resistance, here's support in the channel, and obviously it was bullish up there, and obviously some very big trades. Now, what's important to notice how this high here is equal to one distance width of this trading range here. So this is the DXY trading range from about 2007 all the way to 2014. It broke out there and it topped out at that channel range. It exhausted around there. So that's very interesting. So at the moment, that would give us a bullish perspective because we've moved from here to the upper channel. We're still going sideways, so we're still expecting sort of sideways action, but it's sideways to bullish. Now we're going to put on I'm just going to stop that, take an image. So now we're going to look at how we look at a closer time frame. So I'm taking a faster channel here. I'm going to look at obviously the most recent channel. I'm going to take the lowest point. I mean, I didn't do this. I did this quite carefully over over 30 minutes to work out which channels were working, which points were points. I've had a head start on this. So about that one there, I think, got the current channel. Yeah, I have. Yeah. You see how this is the channel here going up from 2012 to 2014. It breaks out, and as you can see here, there's a big pivot point here. Big pivot point here, but as you can see, this upper channel here, price ran out of fuel at the first extended channel, held by that, and it broke down. Now what's important, where we are here at the end, we're still underneath, we're still caught in this main channel here, we're still caught in this red channel here, which is the original channel from this price action here. We're still caught in that, so we can't scream bearish breakout yet. Okay, so we could swing down and be stuck in this channel for some time, so we really have to take point and see what happens when that high is broken out. When that high is broken out, so price is above there on the US dollar, obviously, you know, we could accumulate up there, so you have to watch it. Then we could definitely move up to the 106 or 107 range, which is the, you know, moving up to that channel end up here. So the first resistance would just be 102, then after that all the way to 105. So we're in a pausing phase here. So as we can see here, the first definition is we're still stuck in the sideways trend. We've sold off from this action here. It was disappointment, came down, we're stuck in the sideways trend. Now I'm hearing on the fundamentals that some economic data is not coming in that great for America. Some numbers, we're not in recession or anything. America's not in recession, I should say. But that's got to be compared to Europe, is obviously a lot worse. And I think if you have to take into account Luke Groman on Macro Voices, his last audio, you'll understand how the US dollar is gaining strength. It's basically because the domestic population are putting the demand up to buy US treasuries, and that's why it's sucking up the dollar supply. So the dollar supply has been sucked up by local demand for US treasuries. So that's where the strength's coming from. So to be bullish on the US dollar, I would watch the pattern and see how long it stays up against resistance, so above 95. And once it breaks out that price range there on that little red trend line, then it could move quickly to 100 and 102. And then obviously long term it's going to creep up. So that's the status, that's the channel action. We're still stuck in this channel range here. We did graduate up there, but we fell back. So we're still stuck in here, but watch out for a breakout. But what that basically means is that we could also fall back down to 92 because we're still in that range. But the bias is that we're still going sideways, stuck in a range between about 96 and 90. But if we do get a breakout, watch out. So that's how to use channels. You really want to apply channels to see where major support and resistance is shown effect by the price action. You've got to choose the highs and lows of your channel to reflect the stock at hand. Okay, I want to see where the price action is support and resistance. And once you see that the support and resistance is moving around the channel, then you know everyone else is using those support and resistance levels. Thanks very much for watching.